Hey traders, Akil Stokes here, and if you've been anywhere near the markets this week, you know that they've been somewhat unpredictable, to put it lightly, leaving a lot of traders, including myself, very frustrated. In today's video, I'm going to show you exactly what's been frustrating me, as well as talk to you about how you can go about keeping your head above water during these trying times. Hey traders, Akil Stokes here, Chief Currency Analyst at TradingPower.com, and welcome once again to another Forex weekend review video. To start things off, I just want to say thank you guys out there for being so supportive, liking, sharing, and of course subscribing. Last week or 2 weeks ago, I guess, I gave you guys a call for action. I said, help me get to 10,000, and we blew past that mark. I haven't thought of a new goal yet, but I want you to keep it up. So right now, take a second, hit that like button, hit that subscribe button if you're new, and then we'll get into today's video. All right, as I mentioned in the intro, it's been a real trying time in the market. The China mess going on, the interest rate kind of reneging, and the markets have just been the wild, wild west. I was talking to Jason Stapleton. I talk to him every day about trading before our war room meeting, and it's been a bloodbath to many out there. In today's video, I want to tell you guys what exactly has been frustrating me. We're going to look at some charts, a recorded session from today's live room, breaking down some trend continuation possibilities on the euro dollar. We're also going to take a look at a live chart, and I'm going to walk you through why I haven't been able to get involved in any of these moves that I've predicted. And then last, we're going to take a look at, well, I'm actually going to show you a recording from one of our war room meetings where Jason breaks down what separates the winners from the losers when market conditions are this type of way. So I'm going to show you a brief clip from today's live room trading session, breaking down the euro dollar and just giving you a sense of how I look at the markets, identify, predict, decide, execute, especially for you trend following traders out there. And then I'll be right back to take a look at the live euro chart and explain to you again why I haven't been able to personally get involved. Euro dollar retracing right against. For you guys that are For you guys that are trend continuation traders, you're just sitting back waiting for the next opportunity. This market is trending beautifully. So if you're a trend continuation trader, every retracement, you should be looking to hop on. You should be looking to hop on. So every time the market's doing this, you should be looking to hop on. The next area right now is right here. If we can come back up in the previous structure again, just look at doing this over and over again. Boom, new structure high, outside return, new structure low, excuse me. Outside return, new structure low, outside return, new structure low. Right? Question is, where's that next outside return going to come to? Well, probably previous structure right in here is a great place to get short, I would say. If we go up, again, this is the level right here I pay attention to. Why? This is our previous outside return. Again, market came down to this level. Hit, retraced, hit, retraced, hit, retraced, broke. Just like the pound Aussie example, we'll probably hit this level again. You got a good opportunity to get involved in that short move. I still think we can go lower. We still thinking what, 112 even. Start going through that if-then thought process. If I enter the trade right here, then where do stops need to be? Well, stops probably need to be above 113.10s, right? Stops probably need to be in this area. Boom. Where do my targets need to go? Well, I'm not a true trend continuation trader, so maybe my targets need to go right down here. Is that a risk reward that I'm comfortable with? If yes, then take the trade or start going to your reason for entry. If no, then you may need to wait for a higher level to be hit. If you're a true trend following trader, Fibonacci extension, swing high to swing low. Bang. Look at that, 127 extension. Right on that 112 even handle that we've been talking about. It better hit it the amount I've been talking about it, right? You keep saying it, Akil. You better get there. I'll tell you what, buddy. Boom. You've got an even better risk reward. Fibonacci failure traders, you may be gearing up an entry right here. You just hit the 382. What do you need to get long? or a short, excuse me. Here's the thing, guys, right? It's very important that we don't get locked into a single way of thinking. I hope you guys are seeing that, right? Are you guys seeing that? We make a prediction. Just because we make a prediction doesn't mean we take the trade, right? We make a prediction. The market does something crazy. It messes up our prediction. We right click the chart, right? We go to drawing tools. We remove our drawing objects, and then we make another prediction. Does that make sense, guys? That's the process of trading. Give me a yes if that makes sense. We make a prediction, we prepare, we know everything we want to do in this trade already, right? You're already thinking, okay, where can I get involved? How can I get involved? Where do stops need to go? Where do targets need to go? For some of you, you're waiting and seeing. Well, it depends on how the RSI looks when we get to that level. Some of you are already saying, well, Akil, all I need is a for it to hit the 618. All I need is a double top. All I need is a lower close. I'm ready to take the trade. Stops are good. Risk is fine. Target ones are here. Target twos are there. I just need the price action to get there. And if price action doesn't get there, guess what? We delete our charts and we do an analysis again. If price action does something silly, if we come down here, boom, we may set up for a potential bat pattern. Well, now we adjust our entries. Well, now instead of entering here, right? Well, maybe we're looking to enter here now because of a bat pattern. Be prepared for anything. That's our job as traders. Be prepared for anything. We don't want to get locked into one way of looking at the market. We want to have enough skills to be able to adjust on the fly, like any great athlete. Okay, so what you're looking at in front of you is the euro dollar on the 15-minute chart. And during our live room sessions, we always do top-down analysis, meaning I start with the daily to get that higher time frame perspective of the market. But we end up on the lower time frame just to do most of our active trading. And as you can see, the euro has been trending very, very nicely lately. Now, for a trend continuation trader, a trend following trader, this is perfect. We showed you guys throughout the entire week how you could be taking advantage of these moves. I mean, just look at the ebbs and flows. New structure low, new structure low, outside return, right back into structure. Look left, structure leaves clues. Bang. We got a retracement. Boom, we get a little bit of a violation here, and then we start all over again. We ebb and flow, New structure low, outside return, look left, structure leaves clues. New structure low, outside return, look left, structure leaves clues. Even in today's movement, if I delete some of what we have going on here, you can see once we violate our previous structure lows right here, boom, we get that outside return. We get new structure lows, outside return, new structure lows, even recently, outside return, new structure lows. Trend following traders, you should have been making a killing in this market. Unfortunately, counter trend traders like myself, or traders that the majority of the time trade counter trend, you're going to get either eaten alive on advanced patterns. I took a loss on a bat pattern the other day, or you're going to find yourself, like in the video, doing a lot of analysis, only needing to erase it and start all over again. And the typical question I get during this type of period where we analyze charts and I say trend following traders will make a killing, counter trend traders get destroyed or just don't get opportunities, often like my September month for you guys that have been following me for a while. The question I often get is, well, Akil, why don't you just be a trend following trader when it's trending and then be a counter trend trader when the market is consolidating or when the market is not trending? And that's perfect. There's only one problem. We don't know that the market is trending until it's already trending. We don't know that the market has stopped trending until it has stopped trending. So if we're going to try and switch up our style and go from one way to another, we're going to end up being last to the party, late to the party. We're going to end up hopping on trend continuation moves or trend following moves after the market has stopped trending. And we're going to see the market go against us. I know many of you out there, have you ever traded a breakout? Have you ever seen the market just break out from a level, big bullish candle, and you get involved late, and as soon as you get involved, the market reverses? Yeah, it's the same type of deal here. You can get lucky and it can work, especially for an elongated trend as this one. But It's going to be very, very hard to be consistent over time doing that. And again, that's what we're looking for. We're not looking for to make a little bit of money here in August, to make a little bit of money in September. We're looking to be consistently profitable over time. What is going to bring me consistent profits, not month by month, but year by year by year by year, so we can really make a career out of trading and not just have a hobby. We want to achieve goals like reducing hours at our job or just quitting our job in general and going full time. And if you're not consistent, well, you're going to find yourself making a mistake like that, find out that you're not as good at trading as you thought, and then you're finding yourself in a very not the best scenario as far as your livelihood goes. Now, with that being said, there are ways that you can be a counter trend trader and a trend continuation type of trader, but not to dig too deep into that. A lot of it has to do with targets. So for example, I will take trend continuation moves, but they have to come to a certain level. For example, a true trend following trader can enter, if we're looking at this move right here, let's say we're looking at this recent swing low to swing high, boom. A true trend continuation trader can enter right here with a good risk reward, because guess what? They're shooting for targets down here. So let's say we're taking a Fibonacci extension. Let's say we're doing a 127 right at this level I told you about. How good am I? You're looking at a potential reward because you're shooting so far away. You're looking at a potential reward like this, where your risk may be, right above previous structure highs right here. You can see even in this scenario, you're getting about a 1-to-1 risk reward. For someone that is not a true trend continuation trader, well, you're not shooting for the extension. You're shooting for a retest of structure right here, and you can see what that does to our risk reward. And I'll tell you what, if you consistently put yourself in a position like this where you basically have a 2-to-1 risk reward, meaning that your risk is 2 times your reward, you better win a lot. You better be an 80% winning trader to bring in some profit. And between me and you, it's extremely hard to be an 80% trader. If you're a trend continuation trader, the market doesn't even trend 80% of the time. So it's going to be a little bit tough. I'm sure there are people out there. I could see the comments coming in now. Oh, Akil, I'm 90%. Some of you are, but the majority of professional traders, again, the professionals, the big guys, the best of the best out there, majority of professional traders are not even above 60%, just to tell you guys the truth. So you want to think about that before getting too cute with these setups. So that's why it's been frustrating. We've been calling these moves in a live room. I've been saying, hey, trend following traders, this is a perfect example, a perfect time for you to get involved. And then the move happens. And then I'm sitting back like, but I know that it's process over outcome. Following my plan is the most important thing, especially in times like this, because it's very easy to make mistakes. It's very easy to blow your account. And Jason did a great piece on this in, I think, Tuesday's War Room meeting for our syndicate members, which I actually have a clip for. So I'll show you that clip, and then I'll be right back to talk to you guys some more.
It's hard not to be excited when the market's exciting. And it's hard not to get upset when you're losing money consistently. But don't let it affect your discipline. Don't let it affect your decision making. If you think that it is, then you just need to stop trading. Just shut off the computer, go to the gym, go spend some time with your family, and don't waste your money, because that's what's going to happen. If you're not trading with discipline and consistency, if you're so emotionally unbalanced that you cannot do that, then you're guaranteed to lose money. It's just because nobody makes money just buying and selling randomly. Nobody makes money emotionally. You make money by being disciplined. And keep in mind, a lot of people I saw a comment online yesterday that said, well, somebody got rich yesterday. And I said, yeah, there probably were a couple of people. Most people went broke yesterday. Most people lost a ton of money yesterday, because that's the nature of the market. Most people lose. A few people win. Those who execute the best judgment, those who follow their plan even when the entire world is melting down, those are the people who made money. Not the people who were jumping in and jumping out, who were getting excited, who were getting wrapped up in all the hype. Those guys don't make any money. The investors who sold out as the market was declining yesterday, and then as the market rallied 400 pips, then bought back in, only to watch the market close down 588 points right before they sold again. Those are the guys who lost money. They're the majority. And in all my years of doing this, the one thing that I know separates winners from losers are guys who win, have a plan, and they follow it no matter what. So make sure that you're doing that. If you don't have a plan, well then, you need to go invest in one of the courses. You need to get serious about it, or go find something else that you love doing and go do that. Leave trading or investing to somebody who actually makes it their business to learn it. But I've always been one who said nobody cares about my money more than I do, and I'm not going to.
All right, so I hope you guys enjoyed that. Speaking of training courses that Jason mentioned at the very end, we've had a heck of a month for former clients. I guess not former clients. Once a client, you're always a client. But we've had about at least 3 people I know of that have gotten hired by either hedge funds or prop firms, hired or are in that evaluation process. And we even had one of my most recent clients on the screen here, Jason Greystone, get interviewed by my friend Brandon Clay over at tradingstory.com. Now, his podcast won't be out until October, I believe. But if you get a chance, it's a great article or a great interview. You can read it here. I personally haven't read it yet, but we've had a lot of members that of our live room, of our syndicate program, that have read it and have just said it was an awesome read. So it's a guy that literally went from nothing to something to loser to loser to loser to loser to winner, and is finally finding that right path of trading. So if you're a new trader out there, if you're someone that is struggling, again, I haven't read it, but from everything that I've heard, it's an inspiring story. And just from knowing Jason myself, it's something that is going to motivate you to get better. So that's it for this week, guys. Of course, do me a favor, hit that subscribe button, hit that like button. Please share it with a friend. Don't hog this valuable knowledge to yourself. That is selfish, and there's no room for that on my YouTube page. So share it with the world. And until next time, plan your trade, trade your plan. Good luck in the markets, and be safe out there. As they are. You guys did a great job of liking, sharing, and subscribing.